There's a sentence being repeated more often now, in speeches, in interviews, and in policy rooms that most people never see. Let's help make America the crypto capital of the world. On the surface, it sounds bold, even optimistic, but underneath it, there's something quieter happening. Because this isn't just about digital coins or new technology, it's about control, trust, and who gets to shape the next financial system before it shapes them. So the real question isn't whether America wants to lead crypto. The real questions are why now, and what does crypto capital actually mean in the real world, not on social media. Tonight, let's slow this conversation down, strip away the slogans, and look at what's actually happening beneath the noise. To understand this moment, we have to step back. For most of its life, crypto existed on the edges. It was born after the 2008 financial crisis, as a reaction to lost trust in banks, bailouts, and centralized power. At first, governments mostly ignored it. Then they dismissed it. Then they tried to contain it. In the United States, the response was fragmented. One agency treated crypto like property, another treated it like a security, and others weren't sure what it was at all. This uncertainty didn't kill crypto. It pushed it into gray areas. Developers built quietly. Companies experimented cautiously. Investors operated without a clear map. Meanwhile, other countries moved faster. Some embraced it, some banned it outright, and some tried to control it from day one. America, for a long time, stood undecided. And now, suddenly, the tone has shifted, not toward hype, but toward strategy. Online, the reaction has been intense. Some people hear crypto capital of the world and think this means prices are about to explode, that regulations are disappearing, and that the old rules no longer apply. Others hear the same phrase and feel fear instead. They worry this is about surveillance or control or turning a decentralized idea into just another Wall Street product. You'll see headlines claiming crypto has finally won, while others warn it has been captured. Some say this is a green light. Some say it's a trap. And most people are left somewhere in the middle, curious, hopeful, skeptical, and unsure what to believe. That confusion is understandable because slogans travel faster than substance. So let's pause here and separate the emotion from the evidence. What's happening right now is not a single decision. It's a process. Behind the scenes, U.S. institutions are doing something very specific. They're trying to define crypto clearly in legal, financial, and operational terms. That may sound boring, but it's critical because capital doesn't move confidently in fog. Regulators are not suddenly abandoning oversight. They're attempting to standardize it. We're seeing clearer conversations around what qualifies as a security, formal discussions about stablecoins and payment systems, increased engagement between policymakers and blockchain companies, and traditional financial institutions quietly building crypto infrastructure. This is not deregulation, it's normalization. Think of it like city planning. You can't build skyscrapers on land that isn't zoned, and you can't attract global business without rules everyone understands. America's approach is not about speed, it's about durability, and that's why the language matters. Crypto capital does not mean chaos, it means jurisdiction. It means saying that if this industry is going to exist at scale, it will exist within a system powerful enough to support it and constrain it. That balance is the entire story. Here's the part that often gets overlooked. This conversation isn't really about crypto. It's about financial relevance. The US dollar remains dominant, but dominance isn't static. It's maintained. Global finance is becoming faster. Settlement is becoming faster. Infrastructure is becoming digital. Money is becoming programmable. If the United States stays on the sidelines of that transition, others won't. So this push is not ideological, it's competitive. What most people miss is that regulation doesn't automatically kill innovation. Uncertainty does. Clear rules don't end experimentation. They decide where it happens. And right now, America is signaling something important. If this industry is going to grow up, it wants it growing up here. That doesn't guarantee success, but it does change the direction of gravity. In the short term, expect friction. There will be debates, legal challenges, and imperfect frameworks. This is not a smooth transition. In the longer term, though, something more stable may emerge. Crypto may become less mysterious, less extreme, and more integrated into everyday financial plumbing. That won't please everyone. Some will say it lost its soul. Others will say it finally found a foundation. Both perspectives can exist at the same time. What matters is understanding the shift for what it is, not what people wish it to be. This is not a promise of riches, it's a statement of intent. And intent shapes policy. Policy shapes markets. Markets shape behavior, slowly, quietly, over time. So when you hear the phrase, "Let's help make America the crypto capital of the world," don't hear it as a cheer, hear it as a signal that the conversation has moved out of the shadows, into boardrooms, into regulatory chambers, and into long-term planning. This moment isn't about hype, it's about direction, and direction matters more than noise. The future of crypto won't be decided by slogans, it will be decided by structure, trust, and patience. And for the first time in a long while, America seems to be taking that idea seriously. Not loudly, not perfectly, but deliberately. And sometimes that's how the most important shifts begin.